So this week has been a complete change around from the trading conditions that we've seen coming from June onwards. With significant goings on within the world and events, we've seen a complete change around. So what that means is we've seen a jump in spot prices and electricity of over 40%, similar to gas prices as well. We've had a bit of trading down yesterday and softening, but yet again it's opened up a bit more aggressive. What this signifies is a step change in the way that the market's trading. Reason for this is for the large events that have happened. So for example, the Israel-Palestine conflict has really spooked the markets. It's reminded us all exactly how volatile the markets really are and how fragile they are. When we compare this to news of a similar ilk that would happen throughout the last 10 years, the market would never react in such a drastic way. And I think that's really important for us to consider the changes that happen in the market now and contextualize them to how they used to happen. So for example, if there was an increase in tensions in the Middle East in say 2012-13, you may see a little jump, 3 or 4% within day, come back down, and a really big situation or quite a significant situation, you would see maybe a 10% jump. But ever since the energy crisis, where we saw prices break through all records known, we see these spikes in much bigger variances, and the 40% on the spot price is a really good example of that. So what really happened over this week is a perfect storm of things we don't want to happen. So we've had escalated tensions in the Middle East. We've had all-out war declared between Israel and Palestine, but also we've had the Australian LNG workers vote yet again for another strike, which is going to affect the wider LNG supply demographic. So we expect to see a lot more competition in the LNG market as China look elsewhere for their LNG as the Australian LNG workers strike. What this means and what this should really tell us is that we cannot afford to get complacent when it comes to market movements. If there is exposure, it really is pertinent to consider how that looks. Maybe revisit any strategies you do have. If you don't have a strategy, get one. And also anyone who's got any exposure late part of 2023, early part of 2024, it may be worth really taking a look at where you are now and securing yourself a stable price to get us through these coming months. Obviously, the situation in the Middle East develops day by day, and as that continues to progress, I can imagine seeing further more volatility, especially in the oil price, as countries like Iran and other OPEC nations start to become more pronounced in this situation.